Now, G7 finance ministers are due to hold an emergency meeting today after the conflict in the Middle East pushed the price of oil above the $100 a barrel mark. It's expected they'll discuss the possibility of a joint release of oil reserves, prices at their highest in 4 years, and traders are bracing for further rises. Right, in studio, we are joined by Tshepo Mongwai, the SABC economics editor, to give us a sense of some perspective here. Tshepo, very good afternoon to you. We've just listened to Wandile Slobo saying that, as much as we are all watching disruptions around energy, there's also disruptions when it comes to fertilizers. And with global oil prices having surged above the $100 mark a barrel for the first time since 2022, how concerned should policymakers be about the broader economic ripple effects and, if oil prices remain elevated?
Yeah, it is a bit concerning. Remember, $100, anything above $100, it's a psychological level. But there are certain things that we need to consider holistically. Is the time? How long will prices remain at these current levels? Is this a temporary blip above $100, or are prices likely going to be sustained at these current levels? And then we'll start to be very much concerned if indeed there's a prolonged period of time above $100. That means that there has to be some reset in terms of the roadmap that have been projected. It may be monetary or fiscal projections that have come through. It simply means some of those models would be out of the window. The regulators must sit down, factor in the new reality that now we are confronting, and it looks like it's here to stay, and then come up with new revisions and be very clear and transparent to the citizens in terms of what is it that they are going to do. I mean, we've just heard about the G20 ministers. It's all about the kitties that you have in order to sway the direction of this international oil price, because sometimes it's the gesture that actually makes things stabilize a little bit, because investors start to believe that indeed you have the ability to arrest very high oil prices if there are reserves that can actually sustain and ensure that those refineries will not just idle, they will be continued supply of oil. Then you might see prices stabilize. But it's not everyone who has those resources at their disposal. For example, in South Africa, unfortunately, we don't have, and we would hope that those gestures by the G20 ministers will benefit us in order to bring down the price of oil. As for us, we don't have any reserves that would actually be able to last us even a month.
What about
so
the
that
talk then about the price jump reflecting panic buying by some countries? I mean, with South Africa being a net importer, what does this surge in crude prices mean then for local economy? You talk about not having reserves. The Middle East is producing, but there is no movement.
It is very important that even in South Africa, government is able to demonstrate that it has the situation under control, because any panic buying it actually works against us, because it can be devastating for the supply of fuel in the country, given the fact that we are the net importers of the finished product, which is either diesel fuel, jet fuel, and so on. So there has to be confidence among motorists and South Africans that government has the situation under control. There will be fuel when it's needed, so that we don't get to those levels where people start to panic. But we are seeing some panic buying in some parts of the country, Bangladesh, some parts of the US, and Nigeria as well. There were reports of panic buying that is happening. It's something that you would not want to see it happening in any country, because it starts to tamper with the supply chains in our country in terms of how fuel is distributed.
At the same time, we've seen the rand weaken back toward the 17 rand to the dollar mark. How does the combination now of a weaker currency and higher oil prices affect fuel costs here locally? I mean, other countries are panic buying. Should we be tightening our belts here at home as motorists?
No, like I indicated, it's all about the trajectory. Do we see these prices continue to go even higher, above $100 or sustained
Yes.
at $100 per barrel? That means that, of course, there's a need to be a little bit concerned, because the impact is immediate on consumers, especially in the form of fuel and logistics cost. So that would hit us immediately. What is also concerning is our inflation trajectory. Where do we see the inflation? The previous expression by the Reserve Bank is that we'll probably not breach above 4% on inflation. But now others are saying we probably breach that tolerance band, which is any number north or south of that 3%. In terms of that one percentage point, of course, above or below 3%. So if we start to break above that 4%, then it surely means that we are starting to see inflation coming in. Now, the issue is what happened to the rand. If you look at the rand, of course, it's eyeing 17 rand to the US dollar, but it looks like the rand is holding its own a little bit. There is a bit of support that is coming through commodity prices. If you look at the JSE this morning, we are not that weak because we are getting that support. I mean, we've been seeing Sasol. It has been really doing very well in terms of the share price. Sasol jumping around 8%. And we've also seen other commodity prices except platinum, where we don't really see much traction. But that will give us support, and that, I think, will somehow arrest that weakness in the local currency. Perhaps can be our saving grace, and we may see that things are not as bad, as particularly Wandile Sprobo talks about higher fertilizer prices.
Yes.
Now, in there we start to discuss the area of second round effects of inflation. This is where inflation really starts to run away and get out of hand. So it is important that the Reserve Bank must demonstrate that with this current increases in price, they are able to deal with these impacts and ensure that South Africans are protected from high inflation.
So okay, let's just go back a little bit to the Reserve Bank. How does it complicate the Reserve Bank's interest rate outlook? Will it be forced to, in the interim, delay or just shoot to the top?
Well, if the risks to the inflation outlook points that they've actually been increasing, we are more likely to see that the interest rates will not be coming down anytime sooner. They will have to deal with those inflationary pressures, and of course, the monetary policy when interest rate is higher. I think number one is they need to communicate and be very clear and convince South Africans and that inflation is coming down, so that those South Africans, they don't start demanding much higher wage increases. The administrators, they don't start imposing very high price adjustments to consumers. So that message must be very clear. So there is an expectation and there is a very clear path of when inflation will come down. But if second round effects are actually creeping in, everyone starts seeing inflation going higher, prices going higher and higher, and what happens? They start to demand higher increases. The administrators, they start to impose higher administrative prices, services become higher, and then inflation just get out of hand.
Is there a silver lining? I mean, could we see South Africa benefiting with the traffic going through the Cape of Good Hope, just looking at logistics and restrictions around movement?
Well, there's no doubt that we've been seeing a number of ships rerouting and using the Cape of Good Hope. Of course, it adds to the hours that ships have to do, but it's a safety precaution that many operators have actually started doing. And of course, also the price of insurance is a major issue. So what we've seen that there's been pressure on Cape Town and Durban because of bunkering. And what we have seen is that Algoa Bay now, they've developed 2 bunkers where ships can actually refuel. And obviously, when you have such traffic, you have people who operate those ships and the crew who actually go out and do some purchase. So there is some activity that happens in those areas.
Very well. Thank you so much. Thanks for speaking to us there. Some, hope in the midst of the tensions that we monitor in the Middle East, the ripple effects, of course, being felt in some way or fashion here in South Africa when it comes to matters around inflation, fuel, and of course, energy. We, of course, will continue to keep a very close eye on developments. SABC News economics editor Tshepo Moai giving us a sense of expectations.